Hey, we're back on ticker symbol XLK. This is the technology sector. The last time we looked at them was on April 7th, so about 3 weeks away, or 3 weeks ago. At that time, it was trading at 149. Currently, it's at 150. So not much has changed in those 3 weeks. And looking at the 1 month chart here in the middle of our screen, yeah, it looks relatively flat. There was a slight dip uh, last week, but it seemed to have corrected itself. I had buy points marked on this one as low as 123, but it also as high as 140. The closest we got during that time was 143. So there actually was a time where I probably would have considered this one. We also have resistance marked at 157. Also noting that this stock or this index is primarily driven by Apple and Microsoft, making up 45% of this industry or of the sector. And then we also marked that it was in a slight uptrend. So uh, we're going to go into some news that we came across for this sector and then wrap up with the technical analysis. If you have any questions along the way, by all means, let me know in the comments. Or if you feel like I missed something in the news and you want to share that, also feel free to share that in the comments. I'd be happy to read it. But with that said, let's jump into some of the news. So right off the bat, we came across uh, just like an industry or I guess an economy analysis, and it kind of gave us a snapshot of all the different sectors. And so if we find the technology industry right here, you can see in terms of earnings per share, it's expecting a minus 15% in the current quarter. And in terms of the year as a whole, it's going to be relatively flat. That said, we're currently seeing a plus 20% year to date return. So a lot of people are buying into this, even when the earnings results aren't matching. So that is something to keep in mind. And we are going to touch on this a little bit in one of our articles towards the end. But let's just kind of go through and see just kind of some of the points that we came across. So here we have Gary Kahn coming in. He's saying companies like Meta, Amazon, and Microsoft are grappling with economic headwinds and mass layoffs. We've seen that time and time again with other. We do follow Meta, Amazon, Microsoft. We've seen all these companies do mass layoffs, so this is kind of normal. We've seen the technology sector taking pretty aggressive action and right sizing their companies, trying to figure out what the economy, where the economy is going. And somewhere along the lines, they kind of break it down as uh, during the pandemic, we saw all this growth in the technology industry, and with that growth came a bunch of additions in employee headcount. But now that we're winding away from the pandemic, we are seeing them, as he mentioned, right size the ship here and make some cuts as they try to streamline their own business. So they wrap up by saying, where is it? Uh, the I thought I had this highlighted. Um, Here it is. So the market has responded by rewarding these stocks because management has gotten in front of the newfound emphasis on making sure shareholder returns are adequate. So that's kind of the trade-off. In terms of the company and its earnings, he's saying this is an okay thing. You know, the mass layoffs are helping the company earn their profit. Yes, you'd never want to see mass layoffs because obviously those are real people that are involved here. But in terms of the stock and the company, in terms of its growth, he's basically saying we should be viewing that as a shareholder as a good thing because it's going to cut excess costs. And that's kind of why we're seeing it grow, even though earnings are down, is because it should balance out over time how expenses will slowly decrease over time, probably next quarter, and the revenue should stay the same, which means the bottom line will grow larger. The next thing, we have this Coursera CEO talk about AI. And of course, that's one of her buzzwords, so we had to look at it. He basically mentions caution with the artificial intelligence as it comes to system controls. And the worry is once AI starts controlling systems, one has to be thoughtful about the optimization that AI is pursuing and what our ability to monitor and control its capabilities. So, the way I'm understanding it is, if we just start letting artificial intelligence basically control and take over uh, all these different things, including the system controls, it's basically AI telling AI what to do. And when you get into that type of dilemma, um, errors can happen, and when they happen, it could be bad. And so he's just warning that that type of situation is likely going to happen at some point, but we need to have our own our own system controls that kind of prevents that from happening to a large scale. It's okay on a very small scale, but I mean, once you start building on that type of habit, it could lead to bad things down the road. And so that's one of his concerns, and it, it's well thought out. Like it does make sense. It is a concern. Hopefully, uh, we do implement controls, and they stay strict as we go down the road, so that some sort of catastrophe doesn't happen. Uh, but we'll see how this plays out. It's a new world. So here we go. This is our last article. And it goes on to say tech stocks have rebounded in the first half of the year, with the S&P 500 technology up almost 150%. That's crazy. After the industry was slammed by rising interest rates in 2022, we go on to say, so this Kenny Polcari from Case Capital Advisors managing partner tells Yahoo Finance that a Fed pause could benefit the tech industry. I think that is most likely to happen. I think the cuts in terms of the interest rate come in 2024, and then I would expect tech to continue to perform well. He also counters it, if we scroll down a little bit, to what I'm betting on is the Fed is going to pause and then just hold rates where they are. If that's the case, then tech should do better. If we start to see the inflation data start to tick up again, forcing the Fed into another position to raise rates, tech is not going to like it, and tech is going to, or investors are going to take money out of the technology sector. And so that's the concern. Um, I think we mentioned it that the Fed is meant to announce what their plan is in May. If I didn't, I'm saying it now. They're meant to announce in May. So that'll give us an idea of what to expect. If they raise the rates, tech might pull back a little bit. If it stays flat, tech should possibly actually increase. And then if they cut, well, tech would go through the roof. But we're not expecting the rates to be cut at this point. If anything, just flat. So I think it's more likely that it's flat, which means tech should do pretty well in the next quarter, regardless of their earnings, considering what we saw in the first chart, that it's up, even though when earnings aren't really showing that should be true. Uh, but of course, we'll keep watching this one. And if you have anything that you want to add to that, by all means, I'd be happy to read that. But going into the technical, so that 150% growth, I'm not sure what he's comparing it to when I look at this, because when we look, it was 112 at the bottom, and now it's at 150. I think he meant like 50% growth. I don't know. Maybe I misread that. But so what we have here is clearly it's in an uptrend. The last time we looked was during this red candle right here. It's kind of been written over with the purple, gold, and blue lines, but it's right here, and we were at the top of what we were calling the fair value margin or channel, and that fair value margin is 132 to 149, so we were right at like 149. It looks like we're trading relatively flat. Right now we're at 150. So some things that I'm looking at are, number one, we're at the top of the uptrend channel. We're above the fair market value point for us. So those two things, I'm not liking that in terms of a buy point today. I was forecasting just based on previous patterns of how it's been like stepping up recently. We just stepped up, and now instead of pulling back, we started to kind of do that in like the first 2 weeks, but then all of a sudden it went right back up. So that's, I guess it's good in a sense. If you're in it already, that's good for you. I'm, however, going to wait for this one to pull back. At this point, my point of interest is about 140, which I had originally. So I'm actually going to update the tracker here just real briefly. So again, I had buy points at 123, which is down here. That's getting more and more unlikely. So at this point, I'm just going to remove that. We had 134, which I think that was just to give us a little bit of a buffer, because this is 132. That would have been the low end of the fair value channel that I marked out. So 134, just a little buffer. 140 is this intersection right here, assuming that my projection actually played out as estimated. We were forecasting 140 would be this dip, and then we would kind of go back up again. Right now, it's not playing exactly like that. But if we look at kind of how we drew the lines, nothing was exactly really at any point outside of the peaks and the valleys. Those are the only points that I really looked at. All the in between, like going back to the original step up, I mean, here it was way above it, but it ultimately pulled back. Then here it was well below it, but ultimately it got to that peak, and then here it kind of danced around it, got to that peak or to that bottom. And so I'm not putting too much into thinking that this one couldn't pull back ultimately to that 140 in the next, say, about a month and a half. But we'll just keep watching this, see how it plays out. Ultimately, I do think the uptrend will stay. It's just, again, I want to kind of catch this one on a better dip, but ultimately it's still in that uptrend like we noted. There's not really much that I can add at this point. So again, if you have something that you want to share, if you think that no, we're now finding support at 147, which also might be the case. Still a little bit too early for me to make that call, but if that is the case, then 147 might be the new magic number. It's just, again, for me, too early to tell. But yeah, that pretty much wraps this up. So let me just share the tracker here just to kind of keep us all on the same page. So currently it's at 150. I have buy points at 134 and 140. That may be updated come next time we look at this one. Resistance at 157. I feel like that one might not hold that well. I think if we can pass it, we might just stay past it. And then we had our notes here, still in that uptrend, driven mainly by Apple, Microsoft at 45% of that sector. So we do follow those. So I think if we see, once we get to them again, if we see good news from them, that'll let us know, okay, technology's in a good spot. But that's it. Please like, subscribe, and I'll see you on the next one. Bye.